Hey, what's going on, everyone? It's Chris with Home Trust Financing. I am your local mortgage broker here in the Houston, Texas area, but I am licensed for the whole state of Texas. And I just want to give you guys a quick market snapshot of where things are at. And one of the things I've noticed recently is what's making a big comeback are adjustable rate mortgages, or better known as ARMs. I know that's kind of a scary word because you've probably heard some horror stories about buyers who got into trouble or maybe lost their house because they were in an adjustable rate mortgage and then it started to adjust and their payments got out of control. And it was a scary time for them. And that's a horrible thing, right? That's a bad, bad thing. But there are a lot of people who did very well with these types of programs. And, it used to be where, the rates on these were about 1% lower than your 30-year fixed mortgage. That's why a lot of people did them back in the day. And then they stopped, right? They got very unpopular after you had the financing crisis and banking crisis we had in 2007 and 2009. The secondary market didn't want these programs, so they kind of really weren't important or relevant for maybe the last 10, 15 years. They've been kind of, nobody wanted them, right? They had a bad rep to them. The good news is that they're kind of making a comeback. And if you understand how they work, it could mean the difference of, like I said, 0.5% to 1% difference on your interest rate lower. And it could be an opportunity where, after the adjustment period, your rate could go down even more. So for example, let's say like a 5-1 ARM that has a 115 cap. Okay, what that means is that for 5 years, it'll be at that starter rate. And then after that, it can only adjust every year. And, on a 115 cap, that means only 1% it can adjust max or lower after that 5-year period, and then adjust every year thereafter, 1% or lower every year thereafter. And then you have a 5% maximum cap on top of your original start rate that it can never exceed. So there are some safeguards that are in place, and people are a little bit more savvy nowadays, so I think it could be a really good program for somebody who has an exit strategy. Just know that it's an option for you. If you guys want to explore and see what those adjustable rate mortgages look like, or how much better those rates can be for you, give me a call. Happy to explain to you, and good luck.